So it's 2
It's
right
2
now.
p.m.
Okay.
2 p.m. I think everybody is has been admitted. So good afternoon, everyone. I'm Gilbert Wong, event planner and third VP at the TCBA, Toronto Chinese Business Association. As today, the first webinar of 2021. Today's topic will be on the impact of COVID-19 on real estate and financing in GTA and the forward-looking outlook. We have two great speakers today, William
Hi, guys.
Chan at Living Realty Inc. Brokerage and Keith Toh, Director of Underwriting at Brook. 20 minutes followed by a 15-minute Q&A session. If you have any questions, please feel free to send the questions, write the questions down and let me know so I can unmute your microphone. So without further ado, let me introduce the first speaker, Mr. William Chan.
Thank you, Gilbert. Hi, everyone. Just want to testing the mic if everyone is hearing okay. And all right, thank you for taking your precious time with us this afternoon. I'm William Chan, one of the directors of Toronto Chinese Business Association and a real estate broker of Living Realty. And today, in this afternoon, I'm going to give you a year-end recap of the Toronto GTA home market last year, 2020, and the expectation, forecast, outlook of this year, and the emerging trend if you want to trade real estate this year. Before we start, I would like to give a brief history of Living Realty. We have been serving GTA homeowners since 1980. For over 40 years, since we have been one of the top full-service real estate brokerage in GTA, one of the largest in Asian communities. From resale, new home, and property management, and we will continue to grow in the foreseeable future. All right, okay. So that is the history of Living Realty. Just 1 second, sorry. There's a little bit of the screen issue, just 1 second. Okay, let's go back. Okay, the first session, the recap of 2020. Well, in 2020, we recorded most number of transactions since 2016. Even though when we entered the winter months, but it looks like, and overall speaking, there was no slowing down in the home market. We do not have the numbers for January yet, but I just checked the numbers today. Sorry, let me bring up sorry, just one quick minute. Let me bring up the chart real quick. But after I checked today, there were, sorry, up to the day of this webinar, it recorded 4,160 total traps sold in the first few weeks of 2021. And last year, the total numbers of transactions in January was only 3,400. Yet, but the last 2 months of 2020 was hitting the record numbers of sales and was the highest after 2016. Statistics-wise, let's look at what happened in our home market history. Just 1 second, let me bring in the chart real quick. Sorry, let me bring back the chart real quick. Just 1 second. Okay. Okay, statistics-wise, let's look at what happened in our home market history. When you look at the chart right here, which showed the total number of sales in GTA from 2003 to 2020. And from 2008, the lowest number of sales of about 74,000 transactions, and it peaked at 2016 and 113 numbers of sales in 2016. However, as you may all know, in 2017, the government policy change did shock the market from 2016 to 2019. On the other hand, the current number showed that the GTA home market sales already up by 21.95% from the lowest point of 2018. And when we take a closer look of to the numbers in the year before, for example, which is 2019, you can see it right here. The home market started with a very strong in number of sales in 2020. Then it hit the COVID-19. And the numbers dropped dramatically from March till April. On the other hand, it went back up. It went back up till July, which already 29% up compared to July 2019. Sure, let me bring up the screen again. As mentioned in one of my home market reports on YouTube, the number dropped afterwards in number of sales. It might be the seasonal adjustment, and it is a trend and it's more significant once we hit the winter months. But in overall speaking, the number of sales were higher than 2019. Which indicated the market was very active. And the average home price the average home price were up from all the way from 2003. As you can see the line right here, even though it only dropped a little bit, slightly from 2017 to 2018, we can easily see the number already went up since 2018. In fact, it has been up since like 1980s. Back in the days in 1980s, the year when Living Realty established it, the average home price in GTA was 75,000. Well, at the end, no one has a crystal ball to foresee the future, but from our history, it looks like it will continue to grow. A very important thing I always remind by home buyer is that the average home price was just a reference only. It may be different when you look at a micro market of your desired area. There were a huge drop also in April in 2020, but bear in mind that when we're focusing on the home market, we should look at the overall trend instead of looking at what is going on in the actual market. On average, it also gained an above 15% in 2020 when you compare to 2019. Let me give you the chart real quick. Okay, when you see the chart right here, that as you can see in the month of April last year, it did drop because of the COVID-19 lockdown. However, it already went back up from to July, as I just mentioned. And even though the actual number of sales were dropped, but most of the time in November and December, it is a seasonal trend. And the last recap of 2020, the condo market hit hard. And many of my clients asked me about the high-rise market within the city of Toronto, 416. And as we all know, there are lots of investors out there who owns a high-rise in 416. In the number of transactions, as it was the same in the overall home average, the condo market also dropped it from March to April. And the number of sales did go back up since April. And let me give you the chart real quick. Okay, that's the condo chart. But the total number of sales didn't change by too much when you compare to 2019. The only difference is there were more active listings on the condo market in the city of Toronto, which we believe there were many investors were selling their investment condo, and also because of the rental market was dropped with fewer immigrants and students coming to the city. And the average price of a high-rise condo in 416 started to drop since November 2020. And that is the overall home market recap of 2020. And next, we're going to tell you what we expect in the home market in 2021. Before we go ahead, I just want you to know that there are still many buyers out there who are still actively looking to purchase something at the rock bottom and to get the most increase in the upcoming years. As in Living Realty, we've been seeing that in the last 40 years, and therefore our information shared with you today at today's webinar, not just a pure prediction, but is a highly educated calculation from numbers and also based on our personal experience in our brokerage. And we have been spending years and years to analyze the GTA home market. And first prediction will be the home price will continue to increase. Let's start with the average home price. The average home price are expected to grow up between 6 to 9% overall. And already, I think it is a very conservative. If you do ask me, the overall home price should be increased by double digit, at least in home in residential type. If you really do want me to give you a better number, one major point is the price is increasing no matter what, given understand the appreciation level for everything around us. And if you may ask, what makes me predict something like this when we are still in a course of pandemic? Well, if you look at all the way back when Living Realty established it in 1980, almost 4 decades ago, you will notice there were actually average 7% increase year over year since the 80s. Even right now, we are facing an unprecedented period of our time. In general, middle class group isn't affected by the pandemic too much in terms of their actual income, and which they are the main force to pushing up the certain aspect of the market. And they are also benefit from the historical low interest rate in our history in order to upsize their home. the whole idea of work from home will give them more push to move to a bigger or more decent home as they have to spend more time in. And however, if you look at what just happened in the past year from November 2019 to November 2020, the home transaction of all houses types were um, about 843,000. And in 2020 November, the average home price was already up to 955,000, which was about a 13% increase and on year over year in the GTA home market. When I do my prediction, I'm very confident on my numbers based on the past and the reality. With vaccine being released and the historical low interest rate, which pretty much will continue in the whole year of 2021, the high level of immigration policy by the federal government and the low level of inventory, both condo and freehold market, and the price will just keep continuing to jump back for the condo side and also with the freehold. And if you have followed my video before, as I already mentioned, in order to have a balanced market in GTA, we need about 18,000 to 20,000 listing on the market. However, even in the flush of the condo listing in the city of Toronto, there were only about 12,000 listing in the last month of 2020. And that is why it gave a huge push to multiple offers, i.e. bidding wars, and this was how the price was driven up. During the last 2 months of 2020, even we did see bidding war. However, based on our experience or based on our knowledge, we noticed that a lot of bidders were not too much outbidded by the successful winner in the bidding wars, as we saw that in 2016, 2017. That mainly result as buyers know how the market pretty well, and they understand how to place their money wisely and do things within their budget. And for condo market, we believe both rental and price is rebounding in 416 Toronto. My expectation is it will slowly crawling back up, definitely not to the pre-COVID-19 in the early 2020. And we should see about 5% increase over year. And one interesting point to note is the condo market and the freehold markets always flow in two different directions. When in 2013 and 2017, the freehold market was growing very fast, and the growth of condo market was somewhat slower and looked like it could not keep up. However, as we all know, in 2017 and 2019, when overall freehold market was slow, the condo market was ahead of the game. And we have to admit that the condo market was really affected by the COVID-19 situation and the new city Airbnb bylaw. And how quickly the condo market going to rebound is highly depends on how safe the economy going to reopen and the overall COVID-19 situation together with the rate people moving back to the city. Whether or not it will increase by a lot will a very good single topic to discuss down the road. But when we look at the move by several tech giants in Toronto about their office space in downtown Toronto, for example, like Google, Amazon, Spotify, according to Global Mail and Urban Toronto, as you can see it right here. The new office space of Google in 65 King Street provide up to 400,000 square feet space for the tech giant. And a lot of us or business owner, we do understand the whole idea of work from home is only here to provide an alternative solution meantime while we are having this pandemic. But deep down, I think everyone knows that it is not if you work from home, we are not as productive as we spend our time in the office. Last year, when I spent time with one of the co-founder of a famous Toronto-based AR VR tech company, he told me, even the idea of work from home is great. However, in the last year, 2020, he saw the highest turnover rate of many new staffs they hired. He keep mentioning that sometimes when you work in a creativities and tech culture, you need a lot of interactions with your colleagues, and you also have to keep up with the corporate culture. And those things you cannot do it if you work from home. That's why, as previously mentioned, many corporations like Amazon, Google, and Spotify, they have their office ready in downtown and then waiting their employees to go back as soon as things are back at normal. And not to mention that in Toronto is where one of the best hospitals and medical research firms of Canada are located. Think of it, a surgeon or a doctor cannot perform an actual surgery at home, right? Or can you bring your research sample home? I think that is the reason why the condo market in downtown Toronto will calling back up. And in conclusion, until now, in all sections of residential real estate market, it is still an imbalancing one. As I mentioned, we need about 18,000 listings in order to be a balanced market. And no matter what of condo and freehold, and it is no right or wrong time to buy, but the market, the actual demand of the real estate in the city of Toronto or the GTA area is what the driving the price up. And so long you buy within your mean and wait and buy within your budget, real estate, as we can see from the first graph I show, it will gradually going up. And you cannot wait and buy real estate in real estate, and you always buy and wait. And this is my part of the presentation, and I will pass the time to Keith. Thank you.
Yeah, thank you so much, William, for the real estate market update. So I'm going to talk about the mortgage financing update during post-pandemic. Before diving into it, I'm just gonna quickly introduce my brokerage and myself. Again, my name is Keith To. I'm working for Burke Financial as Director of Underwriter. We are a relatively newer brokerage. We have been helping over 500 clients in the last 3 years and closed over about 100 million in volume. For a new brokerage, it's pretty impressive. And this year, we are also probably want to tell you that we won the Top Choice Award, Richmond Hill, in the mortgage brokerage category. Now, a little bit about myself. I have over 15 years experience in the banking industry. All through the, just maybe stay on the last page for now. Yeah. So I've been in different roles. For example, financial advisor, mortgage specialist, as well as business advisors. I'm also a CPA, Chartered Professional Accountant. Beside my underwriting role, I'm also volunteering for Toronto Chinese Business Association as one of the board directors. So now I also want to take the opportunity to thank TCBA to giving me the opportunity to meet everybody online. So now let's go through the updates on the mortgage side. So first, I'm going to talk about the updates on the residential mortgage. This is really important information for our homeowners as well as real estate investors, because they may want to adjust their investment strategy according to the environment change. So let's jump to the next slide. Okay, so even though we have such a dynamic environment these days, the principle of mortgage approval does not change. But of course, there were some little tweaks by the bankers. So banks provide mortgage based on this 5C credit analyst. So a lot of us know this already, but I'm just going to quickly go through what they are. So basically, they are character, collateral, capital, capacity, and credit. So let's talk about character. So bank, basically this is the client's character. So banks wants to know their clients, what their characteristics look like. Obviously, they want their clients to be as stable as possible. Like, for example, stable jobs, stable income, stable address, etc. However, during the pandemic, more than 1 million job was lost in Ontario in the first few months. So most of the banks has come up with uh, a policy to allow borrowers to the existing borrowers to defer their mortgage payments up to 6 months, since this is due to this natural disaster. So due to the reason being is that it's not because of the client's behavior change in order for them to maybe have to delay the payment. It really is the situation. Yeah, now this situation seems more stabilized now. Actually, could you go back for 2 page? Uh, no, actually, one more. Next. Yeah, here. Uh, Anyways, now the situation is more stabilized. So the banks become more active on lending out the monies at this point. So some banks are willing to. So again, some clients are basically still have the job, but they have been sent home to wait for to come back to work again. So some lenders are willing to take letter of employments in terms of with a returning day in order to lend on new mortgages. So these are some of the changes. Now let's talk about a little bit of collateral. So yeah, here. So collateral is another items that bank looks at. Bank would lend on mortgage based on the value of the property, basically. Most of the time, we can see they would like to lend on 80% of the property value. However, some of the property value does affect by the pandemic. For example, downtown Toronto's condo were hit hard. Uh, so it dropped for about 9-10% during pandemic. So this would reflect on the property appraisal, since when the appraisal is done, the value obviously will reflect on the appraisal, and lender would only lend on, again, 80% of the appraisal. So so even it's still going to be 80% loan to value, the actual mortgage amount might be affected. So also, there is one interesting thing I want to bring up as well, is about the appraisal. So these days, since a lot of the clients or the appraisers not willing to go into a property to actually do the appraising work, just because they want to stay away from the unnecessarily contact. So what the appraisers come up with is what they call an alternative appraisal. So what they do is, instead of going into the property, they ask the current homeowner or tenants to take pictures for the interior of the property. Of course, they still gonna do the external appraising. So with those pictures and their appraisal outside, then they combine all these material and come up with an appraisal. And most of the banks are accepting alternative appraisal at this point. So next slide, please. So capital. Banks focus more on this item at these days, because I'm not saying that they don't do that before. So capital, again, this is talking about the personal net worth of the clients. For instance, how much savings they have in their bank account, how much investment they have, etc. So to translate this to another word, which means the banks wants to know if, in case the client lost their jobs, how long they can keep making the mortgage payment. Okay. For purchase, again, this is one interesting fact I want to bring in as well, is that client may want to have their down payment money sitting in their bank accounts for more than 90 days, because it tends to be a lot of new home purchase buyer forget about this. It's due to the anti-money laundering policy. So next slide, please. So capacity. Capacity basically is the income of the clients. So obviously banks wants to see the borrower's income is good enough to cover their mortgage payments. So they would look at what they call GDS TDS ratio. So for GDS is gross debt service ratio, total debt service ratio. So the ratio has to be lower than the benchmark. For traditional bank is 39 to 44, 39 to 44%. So we do have some lender has more flexibility on the benchmark. As mentioned earlier, at the point, some banks were willing to lend with a letter of employment that stating a returning date for new purchase. Now, actually, most of the banks are back into their normal guideline. Okay, so next, credit score. This one is pretty straightforward. So I'm sure a lot of us heard about Equifax. Equifax is an organization which would evaluate clients' payback history, and they would providing a credit score. So these days, a lot of clients' credit score got hit again due to the fact that a lot of them has lost their jobs. Even most of the banks are back to their lending guideline now. Then there are still quite a few lenders willing to look at those files as long as the reasoning makes sense. Maybe the credit score get hit is not as high as they were before. But again, as long as the situation or the story makes sense, they would still willing to make the exception to lend on those mortgages. Okay, next page. So after the residential, I'm going to talk about the commercial mortgage. So it's the same 5C principles still hold true, but I'm just not going to go through it one by one. I'm just going to talk about the two that has major difference. Let's go, to the another page again. Yeah, so collateral. Since the usage of the residential, like home, house, comparing to commercial property are so different. So the way they evaluate the property is really different again. So since so banks are going to look at marketability in terms of listing and selling. In business, people always talk about location, 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 right? It's also applied in this case. Since that transactions if it's easy they want to make sure the property that they are landing on is easy to rent out, easy to be sell. Um, it's just because of the liquidity as well as the profitability. So the loan value is a little bit different comparing to the residential as well. It's usually 65% to 75% loan to value. And again, due to the house market's fluctuation, it might varies. Some lenders being maybe a little bit more conservative and scale back a little bit, but it still would be about 65%. Yeah, next page. Okay, the next item I want to talk about is capacity. So since commercial building meant to be profitable, so the rate, the ratio the bank's looking at are also different. So what they look at, how they would be able to come up with the payment. They based on this ratio called DSCR, debt service coverage ratio. So basically, it takes the net operating profit divided by the mortgage payment. So in this one, so net profit would be the rent or the business income actually in this building, minus the maintenance, utilities fees, management fees, divided by the mortgage payment. So the ratio they're looking at is usually 1.2, 1.25. So again, that would be sufficient to have the building self-sufficient in terms of payments. So again, so let's move on to the next page. So interest rate forecast. So before I jump into it, I just want to recap in 2020 what was happening in for the interest rate. So in March 2020, Bank of Canada slashed the interest rate 3 times in 1 month by 1.5%. So this is pretty drastic due to the government wants to be ready for the economy to be able to take this hit, because as you know, a lot of business might not be able to open their doors. So that was the plan. So as well as the mortgage rate, it also followed through. So let's move on to the next slide. So as you can, I don't know if everybody can see this clearly here, but in 2019, the third quarter, most of the banks are still doing 3.75%. And again, first quarter 2020, the rate start dropping just in this 6 months. The rate went from 3.75 down to somewhere around 2.2%. So again, in this 6 months is pretty drastic. And now, and as you can see in the second half of the year, it kind of stabilized at about 1.9-ish. Now, for most of the other major banks, their forecast is the interest rate might start pick up in the first quarter of 2021. And as we can see, again, in my own opinion, again, I don't have the crystal ball on hand, just like William. But I kind of agree with their point of view, because after all, the policy of cutting down 1.5% in interest is temporary. especially for this pandemic environment. And once people adapt into this new normal, or um, the economy comes back up, then the interest rate will eventually slowly, steadily going back up. So as you can see from the graph, so in the next year, it might not start picking up right away in the first quarter, because it seems like we're still having a lot going on, right? But as you can see in down the road, in the coming few quarters, the rate might start come back up steadily. So that's my market update. So the conclusion, we touch about the residential mortgage, commercial mortgage environment, as well as the interest rate forecast. Now I'm gonna pass this back on to Gilbert.
Thank you, William, and thank you, Keith, for the informative presentation. Let's move on to the Q&A session. If you feel free to unmute your microphone so you can ask the question. I'm going to open the floor up to your questions, and so Keith and William can answer them. Let me see if I can.
This is Jim.
Any? Okay, Jimmy, please feel free to ask your question,
Okay,
Jimmy.
William. So for commercial, where about would you think will be the hot region for commercial property investment? Because I know downtown office right now, forget about it, right? So do you have any
okay,
and actually
great.
certain kind of tip, like about if we have money to invest for commercial property, what kind and where about you actually will think that will be good?
Well, for commercial property, even though the office in downtown is kind of like you try, like unless you have a real like you have actual cash flow on you, I would say maybe you just wait and see what's going on with the downtown office. However, in commercial wise, and I would say anything along King Street, Queen Street East or Queen Street West, those like those older building, upper like the upper level is a residential, lower level is a commercial, like storefront commercial unit. You might want to take a look, because at the end, since we are in the pandemic, a lot of shops in Toronto are closing down, and the owner of those buildings might not have enough cash flow to maintain the property, and if they cannot keep up, they might have to sell it. Even though on Dundas West, along Dundas West, it was in downtown Toronto, closer to Bathurst and closer to the Western Hospital. I see quite a lot of vacancy on their shops these days, and that's the area like I would take a look in Toronto. However, but of course, those numbers will be high. The actual sales price will maybe higher for someone to afford. However, like for commercial real estate, and we always talking about the rental income. Um, when we take a look of the actual value, you may see a great return rate. The return rate for commercial units or commercial property outside GTA, and we'll do actually we were planning to do a different seminar, a webinar for commercial properties outside GTA and down the road. So just stay tuned, and then we will have that more detailed commercial properties to you as soon as when we have the commercial property seminar.
Thank you, William. And if anyone has any other questions, feel free to unmute your microphone so you can ask your question.
Thank you, William. And one other thing, though, would you actually have, like, because I know I heard about we are going to utilize YouTube for making short video. So would you actually, you guys will actually, like from Living or from, you guys can create a series of the video. So give us like, okay, now we outlook like, so we can actually pick up the time instead of we guessing the timing. You guys actually have all the data to support, right? Because to look for a bargain right now may be too soon, but it probably will come out very soon when the market starts recover. So that will be time for picking up bargains, right? So
Well,
yeah,
yes,
video or follow up or something like that.
sure, no problem. Definitely, we'll prepare that and then let you guys have an updates afterwards.
Does anyone else have a question for either William or Keith?
Sorry, me again. This time the question will go to Keith. For this time, but when we have the pandemic, when a lot of business go under, and the fund, okay, fund for commercial property, um, how hard or which area could you think that we can actually easiest to get a commercial mortgage to buy on those investment property? Keith.
Yeah, good question. So to that, you're mentioning which area. I would still say in the GTA area, for example, GTA, as well as the outer skirt, like Hamilton, Newmarket. I mean, as long as the business or the rent roll makes sense, the lender is still lending on those areas.
Thank you, Keith. Yeah, that's good. So it actually gave me a lot of direction for that, because a lot of people concerned about they wouldn't actually get finance if they want to, even though if they get opportunity, but they won't get the money, right? So good.
Right, and actually, to that, there are some lenders would be able to be think out of the box, be a little bit more creative, and be able to lend on those properties too. Because after all, the bankers they're looking at two things. If the owner of the property is the one who running their own business first, they want to see if the business is gonna be above the water, right? If it still holds true, if it's still the case, then obviously it shouldn't be a big problem. And the other components would be tenants. If the property is meant to be for renting out, for example, office building, as long as it's still renting out in certain percentage, they can still look at it.
Right. Sorry, one thing to add on to Jimmy, and one quick like something to keep in mind, like if you're going to purchase a commercial property and going to do a finance, and it might not necessarily be the top tier bank in Canada, let's say TD, RBC, and Scotia, whatever. Sometimes if you do purchase a piece of commercial property outside Toronto or in, let's say, Hamilton or even Kingston, like there's a lot of um, local credit union or financial company. Since they know more about the market in that area, they may be more willing to lend you money in terms of those commercial property in those areas. So like I can assure you, and a lots of people do have the money to lend out these days.
Yeah, for sure. We have, like, for example, our brokerage has really good relationship with a couple of those credit unions and even private lenders.
Great, fantastic. So back to Gilbert. Yeah.
Anyone else have a question for William and Keith? You can unmute your microphone so William or Keith know question you would like to for them.
So anyway, me again. So Keith and or William. Okay. So well, a lot of people are not very familiarized with these commercial things, right? Property and things like that, or commercial mortgage, was engaged, because they are quite different from. And a lot of people don't even know like what is TMI and all those things, right? What kind of thing engage? What would be a landlord have to know, like if you actually want to buy something on that side for the commercial, uh, uh, how would you think that you can break even? And how would you think how marketability of the property? How easy you can find tenant? I think maybe William and Keith can actually help. Like William can help about the property, and Keith know about all those exact things that factor in how operating the little property and the business, right? Generating income.
Sorry, Jimmy, can you repeat your question again?
So William,
Yes.
most people don't know about too much about all those commercial property, like retail. We know, like we pay our utility and things like that,
Right.
but in commercial, like if I go out and just talk to someone, what is your TMI?
Yeah. Are you
Many of them
okay?
don't even know what the about.
So I would maybe I'll start taking on this. So in terms of commercial buildings, there even itself it includes a lot of different categories. Like we can be talking about office space, office buildings, or we can be talking about uh, industrial bay or plaza. Like those are all different. And banker will have they would have knowledge for sure in different areas as well as different type of buildings, right? And they all involve different degrees of risk from their standpoint. So I would say as an investor, it's really important for them uh, to be familiar to be familiar with the area they want to be invested into and be the expert about that. And that kind of comes back to maybe finding a good realtor with the knowledge will help them big way, right, William?
Yes, of course. But at the end, if you purchase a piece of commercial property, a lot of time we do ask like, what's your actual purpose of a purchase a piece of commercial property? If you purchase for your own use, and then or maybe you want to open, let's say you want to open up a restaurant in downtown. Of course, downtown we know it, right? In Toronto. However, if you want to open a resort in a let's say Blue Mountain or a resort related business, then then we might go back to ask yourself, or ask you who approach us for commercial property, like how much do you know about this sector of business, about then we might able to find you something that is, let's say, in a more to find you a commercial space or storefront that get the most traffic. However, whether or not it able to handle that commercial real estate being your own business is a different story. So as for commercial real estate, a lot of things to consider for, especially if you want to handle it by yourself to manage your own business, or you just want to purchase a piece of commercial property for pure investment only, and then you have no involvement in the day-to-day running, then that may be easier for us to give you more idea down the road to think of the return and the price and the location for those. However, if you are looking to like operate your own business too, if you purchase a commercial property, I think that will be a different story.
Great. Thank you so much for both of you.
Thank you.
So I look forward to
Okay,
see both of you to update to us a lot of series of video.
No problem. Definitely.
Thank you.
Okay, thank you, Jimmy. That about wraps up the webinar for today. Thank you again for joining us today and for your support. Thank you, William, and thank you, Keith, for the great presentation. Feel free to contact them directly if you have any additional questions. I look forward to seeing you at our next webinar.
Okay,
Thank you so much.
Thank you,
Thank you,
Bert. Thank you, everyone.
Thank you.
Thank you.
Okay, see ya.
Bye-bye. Have a good day.
Bye-bye.
Thank you.
Bye.
Bye.
Bye-bye.